The ultimate goal of real estate investing is to make money. And if you want to do that, you can learn a lot by studying the mindset and the strategies of people who have been successful at it. But you can also learn from those who have made mistakes and have lost money. And one of the biggest losers over the last several years has been Zillow. Now, first of all, this video is not about bashing Zillow because they have done a lot of things that deserve recognition. They came out of nowhere, and in a very short period of time, they established themselves as an authority on real estate. For rental listings, I've actually had potential clients tell me that if a house is not listed on Zillow, then it's either not available for rent or there's something wrong with the house. Now, of course, the reality is both rentals and sales flow through the multiple listing service, otherwise known as the MLS, which is managed by the local board of realtors. Now, for rental listings, Zillow has actually set up their own rental service, which is separate from the MLS listings. In other words, if a house is listed for rent on Zillow, that owner or that agent has paid Zillow to list the property there. And that same house may or may not be listed simultaneously on the MLS. But if a consumer doesn't know that and perceives Zillow as a more trusted real estate source than the local board of realtors, you really have to hand it to Zillow because that's quite an accomplishment in shifting that consumer's perception. Now, even though Zillow has done a lot of things right, their home flipping business, which was called Zillow Offers, didn't go so well. Let's back up just a little bit and talk about the information that's actually available on the Zillow website. One of the most valuable things that Zillow offers is convenience. Anyone can go to their website and access tax appraisal values and list prices, which is all public information. Now, the other thing the Zillow website offers is a Zestimate, which is Zillow's estimate of a property's value. Well, since they've been able to market themselves as a trusted real estate resource, and they make it very easy for anyone to access an estimate of a home value, they have become a very popular destination for both buyers and sellers. Here's the problem though. Convenience is one thing, but accuracy is another. The one thing that Zillow does not have access to is the actual sales data that's in the MLS. And the sales data is the most important information that you're going to need if you're going to come up with a value on a home. If you can see what homes have sold for in that same area, it becomes much easier to come up with a more accurate projection of what a comparable house may sell for. Those sales prices are recorded in the MLS, and that data is managed by the local board of realtors. The only ones who can access that data, though, are the members of the board, the real estate agents, and the brokers. In other words, the data that's available on the MLS is much more valuable. But because it's not available on any kind of public website where just anybody can access it, it's much harder to get to. Now, you might question whether or not this MLS data is really as valuable as I'm telling you that it is. And I'd like to give you an example. But before I do, I'd like to say this. I make these videos to provide information to enable you to make better decisions if you're buying or selling real estate. But the only way that I'll know if you like them or if you find them useful is if you comment on the video, like the video, or subscribe to my channel. Also, if you're thinking about buying or selling real estate here in the Austin area, I would love to help you out. You can shoot me a text or an email or schedule a phone call on the YouTube channel page. But enough about that. Let me show you how the Zillow home value information can be a little misleading. This house is currently listed for sale, and after a recent price reduction, the list price is right in line with this estimate. The problem is that nobody's willing to pay that kind of money for this house. Take a look at the estimate history. In April 2020, this home was valued at $427,000. It jumped to $657,000 in June 2021 and peaked at $942,000 in June 2022. Now that looks great if you're the homeowner, but let's take a look at what the market had to say on what the value of that house actually is. The MLS data shows us that it was purchased in December 2021 for $588,000, which was below the Zestimate value of $657,000. So if someone could buy this house for $588,000, maybe do a little bit of remodeling, but in less than a year the value jumps to $925,000, well, that homeowner's doing pretty good, right? In fact, who wouldn't want a deal like that? Unfortunately, the market does not align with the Zillow estimates. The house was originally listed in June 2022 for $925,000, and over the course of the next 2 months, the price was gradually reduced to $900,000, but it didn't sell. It was taken off the market in late August and then relisted in October for $869,000. But there's been no buyers for nearly 6 months. The list price is currently $749,000 and there are still no buyers. That seller is probably going to need to move that list price much closer to the price they paid for it, or they're not going to be able to sell the house. Now, this is just one example, but it is very important to remember that this is the same algorithm that Zillow used when they were buying houses. So it's no wonder that they had problems with Zillow Offers, especially when you consider that they were doing this on a much larger scale. Zillow was not buying just one house. They were buying thousands of houses across the entire United States. And of course, this type of real estate investing does not produce the type of results that you're ideally looking for. If you're paying more for a house than you're able to sell it for, that means you're losing money. And if you're doing this on a large scale, that means you're losing a lot of money. In Zillow's case, they lost nearly $500 million in a single quarter. That was enough for them. So after that big loss, they shut down the Zillow Offers and got out of the home flipping business completely. Now, unfortunately, some of the smaller flippers who may only have one house are not always willing to admit that they've made a mistake and cut their losses. In that example we looked at earlier, that owner attempted to rent the house on 2 different occasions, but they weren't able to find someone willing to pay the kind of money that they were looking for. So they have a house that's been vacant for over a year that they can't rent, nor can they sell for the kind of money that they're hoping to get for it. And all this time, they've been paying taxes, insurance, all the maintenance, and any kind of loan payments without any kind of rental income coming in, all because they're not willing to price the house where it needs to be in order to sell it. Now, I get it. Nobody likes to admit that they made a bad investment or lose money. But in some cases, the longer you hold on to a bad investment, the bigger that loss can grow. This type of investing is really no different than what we've seen in some of these recent bank failures. In the case of Silicon Valley Bank or First Republic, they have federal oversight. So when their liquidity falls below a certain level, the federal government steps in and shuts them down. Individual real estate investors don't have that kind of oversight. So it's possible to refuse to admit that you made a mistake and watch a $20,000 or $30,000 loss balloon into a $100,000 loss very quickly. Now, the one good thing about real estate is it's impossible for the value of that property to drop to zero. Even if that house burned down or was completely destroyed, there would still be value in the land, whether there was a house on it or not. And that owner probably had insurance, so if the house was destroyed, they would get back the replacement value. Now, whether or not those values are higher or lower than the amount of money the investor has in the property already, well, that could be a different story altogether. We are in a market where a lot of people think that if they wait, they're going to see prices return to where they think they should be. But if you look at periods like the 1980s, which have a lot of similarities to what's going on in the real estate market right now, periods like that paint a very different picture of what we might expect moving forward. In the early 80s, aggressive interest rate hikes stalled the housing market, and the savings and loan crisis towards the end of the decade suppressed real estate values for another 5 to 7 years. Now, I am not saying that what happened then is going to happen now, but I am saying that being humble enough to admit that you've made a mistake and cut your losses could potentially enable you to put those funds into a better performing asset and actually see a better return than if you remain stubborn and refuse to let go of a bad investment. Now that you understand some of the risk associated with investing in today's real estate market, you might want to check out this video, which goes over the 7 deadly sins of real estate investing in the Austin area. And don't forget to subscribe to my channel and ring the bell. That way you'll get a notification every time I post a new video.